went public 1 year ago, and shares have more than tripled since the company's IPO. The valuation equates now to $33 million per restaurant. And of course, that's an eye-popping number per restaurant that makes just a few million, I understand, per year. Bloomberg's Bailey Lipschultz joins me now. The per restaurant valuation, I've got to say, feels a little new of a way to navigate a risk factor for valuations. You know, what are people across the street saying about what that really means?
Well, we saw, Sonali, the downgrade at JP Morgan was predicated on that. To your point, $33 million seems high and seems like a wonky number, higher than the value that Chipotle gets. And Chipotle is the gold standard, more than double what Sweetgreen gets. So when you look at the fact that each of these restaurants, on average over the last year, is closer to 2.75, less than $3 million in revenue per storefront, that's kind of a jaw-dropping multiple. And again, more than $10 billion valuation. Stock is up 4x, so 300% from going public a year ago. That's really drawing some of those questions. And when you look at it on a comp basis, Portillo's is at $8.5 million per store. Wingstop, which is a hot stock, only at $5 million per store. So this is a company that's predicated on the fact that they want to get to 1,000 restaurants in the next decade. But really, when you look at the growth that that's predicated on, really kind of outstripping the current valuation for a company that really only has a handful of proteins.
You know, it's interesting. Yeah. Have you had Cava?
I have not, which feels like a crime.
Plenty of protein. The Cava stock has risen more than double this year. And even if you see a little bit of a decline this day, you see about 3.7% down on the day. It's interesting because when you normally see downgrades, it's because negativity around something else about the company. It seems that a lot of the downgrades you're seeing is on valuation alone.
Yeah, valuation alone kind of. The question gets to how can you grow into a $10 billion valuation? Yes, people want to ascribe the fact that they're kind of sketching out a vision to get to north of 1,000 stores within the next decade. But when you look at the growth struggles that some of these restaurants have had in the past, you look at what happened with Chipotle, that's what a lot of the skeptics also point to. When you're growing quickly, you're training staff on the fly, you're handling things like meat, whether that's beef or lamb, and some of the issues that can come with cooking that. So a lot of the uncertainty around being able to grow not only on the East Coast where it's predominantly based or in California, but throughout the Midwest, which they see as an untapped potential. But some consumers, again, with the shift down, tighter spending budgets, kind of how that can play out.